Hello and welcome to your November market update. It looks like the Australian housing market is starting to cool off a little bit, with national home values only increasing by 0.3% in October. While growth is slowing, buyers are getting more options now and are acting with a little less urgency thanks to a 14% increase in stock this winter. However, Adelaide is still sitting comfortably as one of the country's strongest markets, with stock levels 7% lower compared to this time last year, which is keeping the buyer demand strong. Just on the Adelaide market overview now, the Adelaide housing market continues its trend of rising by over 1% each month since March. Notwithstanding values rising by 1.1% in October, we are experiencing a slight cooling in buyer interest with an approximate 30% reduction of buyers attending open for inspections and the auction clearance rate reducing, leading to an increased time on market in some instances. While there is this reduced activity, values remain strong, buyers are more circumspect but still making offers, and eventual sale outcomes are at mostly expected market prices. Some of the sales highlights: this house value rise in October adds another $8,540 to the median dwelling value, with current averages now at $864,487 for houses and $574,362 for units. Unit values are driving consistent value increases as buyers seek affordability, with an 18.5% increase over the past 12 months, while house values have gained 14.5%. On the rental market update, what's interesting is that we've finally seen the rental market slow to less than a 1% increase, with just a 0.9% rise over the last 3 months. This is the first time that's happened since September in 2020, suggesting we might be seeing a bit more stability after years of rapid growth. The average rental price for houses is $595 per week, and the average unit rental price is $520 per week. At the coalface of rentals, our data here at Turner indicates that the rent sweet spot is between $450 and $600 per week, which is in line with the average. This is where we attract the most tenants and have the shortest vacancy rate, over $600 per week, and there are less tenants. Our prestige portfolio of properties, which is over $1,000 per week, are attracting tenants and being let in short time. Many of these properties are being let on the Turner website only and by matching a dedicated portfolio of tenants for this high end of the market. Onto the outlook now. The housing outlook is shaping up a bit differently from what we've become accustomed to. Slower momentum, more stock on the market, and a bit less buyer urgency are changing the landscape slightly. However, it's not all quiet on the buyer front. There's potential for more buyers to come out of the woodwork soon, with trends pointing toward lower inflation and possible interest rate cuts early in the new year. Buyers could see some easing on financial stress and increased purchasing power with these changes. We expect the capital value and the rent yield of houses and units to stabilise for the time being. How we can help at Turner Real Estate: just this week our sales team undertook extensive training on the new rent legislation and how it affects property owners wanting to sell. Our property management team have also undertaken significant training on the new legislation to serve our current and future clients better. So we always welcome your inquiries and queries on this topic without obligation. As always, please go to turnerre.com.au to see the properties have for sale and rent only. These are properties that are not on any other portal. So call us on 8468 1000 or visit our website turnerrealestate.com.au to get in touch. Speak to you next month.